and welcome to the Financial Freedom Show with Paul Taylor. And today I have a special guest, Brian Geiser, out of Greensboro. Good morning, Brian.
Good morning to you, Paul. How are you, my friend?
Doing great, doing great. This show's all about where knowledge is money and knowledge is wealth. The more knowledge you can have, the better you can serve yourself. Too much information out there is not open like this program is, and we're going to be able to talk about it. If you want to talk with us or would like to email any questions to us, I'm going to give that number to you right now. It's 1-800-551-5086, 1-800-551-5086. Or you can email us at PT, which is my name, Paul Taylor, PT, at capitaladvgroup.com. We have a great show today. Folks, if you're tired of hearing product being preached on the radio or people just talking and doing types of sales on financial stuff, if you've been to seminars and you're tired of hearing the same old, welcome to our show, the Financial Freedom Show with Paul Taylor, where we're going to be talking about a number of things today. One, we're going to be talking about the false GDP. Numbers were a lot lower than they anticipated, and we're also going to be talking about one of the biggest things. If you have an estate, folks, over $2 million, and don't think that you don't, because when the government adds up your estate, that includes your home, that includes your house, all assets, and if your life insurance is in the estate, that's going to be included also. So stay tuned for that, because there is a loophole in the tax law just for 2012 where you're going to be able to do something. So, Brian, let's talk about those GDP numbers.
Yeah, GDP numbers, Paul, just to put it bluntly, come out way below what they had reported in August. And I say way below, 1.7 to 1.3% doesn't sound like a whole lot. But if you take that on a percentage basis, it's almost 20% difference, 25%.
That is huge.
That's gigantic. And, once again, just anything to prop up this market and this false illusion that's really, really, really coming to roost. And it's slowly but surely creeping in that our market isn't quite where it's supposed to be. And I feel pretty strongly that with these weak GDP numbers, which, I always say on my show, that basically in a nutshell, if you don't have strong GDP, strong housing, and strong employment, you've got a weak economy, which obviously those three areas are very weak. They're saying, but the housing numbers are coming around. They're not even close. And now that this real GDP number has came to roost, the markets are starting to react to it. On Friday, they started to react to it. And folks better look out. I mean, that is a huge difference. And if we have a weak GDP, it means we have a weak economy, which means we have a weak country. And it really concerns me.
Well, and let me educate our folks out there in Radio Land here. A GDP is the output of goods and services, and what it means is there's not as many goods and services being produced because people are not buying as much. And there's a reason, and Brian, we know that reason is because salaries are down, people are not making as much, there's unemployment is up, and there's just a number of factors that are that are guiding to that number, and that's a big decrease. You said 20%, correct?
Yeah, I mean, we went from 1.7 is what they reported in August, and the real number comes out 1.3.
Yeah, that's incredible.
So, almost 20% difference. And, folks, GDP is what we create inside of our borders. In other words, we are not creating as much stuff and services, if you will, inside of the American border. And if that's the case, that means you've got a weak economy. And everything ripple effects out of that, housing, employment, you name it. And I think, Paul, the biggest reason is fiscal policy is just so unclear. It's the muddiest I've ever seen it in my lifetime. And to put that in perspective, I'll be 46 next week. So it's just, I don't even know where this country's going from here. We got to quit printing money. You cannot print your way out of this mess. Hopefully we will create jobs our way out of this mess.
Well, and the QE1 and what he's talking about printing money is the quantitative easing 1, 2, and now we have a no-cap quantitative easing 3, which was recently passed, which is very scary. We printed over $2.8 trillion over the last 18 months, and now we have a no cap of printing money. And folks, if you just look back in the 70s, and history does have a tendency to repeat itself, back in the 70s when we first started printing money without the gold standard, we had inflation beyond what anybody could believe in the late 70s. So, but we got to pull out of this economy and this weak economy before inflation ever starts. But when we start pulling out of it, that is going to happen. But the reason we're talking about this today, folks, is because you have got to realize what's going on. First of all, if you've had investments in the S&P 500, Dow Jones, NASDAQ, it doesn't matter. Since 2000, your portfolio has done nothing but remained flat. And Wall Street has got you fooled and has got you believing that bonds and stocks are a diversified portfolio. Brian, I'm pretty sure both bonds and stocks went down in 2008.
It was pretty ugly, and not only is that the case, Paul, people better right now have an exit strategy because of what they're setting us up for. I think after the election, after the election, it won't matter anymore. And, they can pull any plug they want, and I guarantee you the bears take the elevators and the bulls take the steps.
And what you're talking about after the election, not only do we have the that coming up, but also what they're calling the fiscal cliff. And, folks, that's where if they don't redo the tax laws, there is a fiscal cliff that's going to occur, and that's going to be, one, on estate taxes. Once again, if you have a large estate, stay tuned today because we're going to talk about that. But if you have a large, or even if you don't have a large estate, it's going to revert back to $1 million. If you have anything over $1 million, you're going to get taxed starting at 50%. Also, we're going back to the pre-Bush taxes, which would mean higher income taxes, higher taxes on capital gains, just a number of issues of what, pretty much what everybody's talking about on the radio and on TV constantly is the fiscal cliff. So,
and everything, Paul, that's the reverse of a growing economy.
Exactly.
Everything that will take down an economy is what that is.
Well, listen, one thing that we do offer a free class at this time. We're going to start charging for it eventually, but we do have a number of people calling in for this. What we do at our little seminars is we just tell you the truth. It's non-products, it's non-selling. It's just educating you a little bit more so that you can be armed, because once again, knowledge is wealth. You can reach us at 1-800-551-5086. Once again, 1-800-551-5086 to sign up for one of the mini classes. Once again, we do these every Tuesdays and Thursdays, 4:30 and also at 6 o'clock. I have locations here in the Charlotte area, Lake Norman area. We've got Huntersville covered. We've got Ballantyne. We've got South Park, and we're also right off of I-77 in Arrowwood. So once again, if you'd like to meet, be a part of one of our educational mini seminars, you can reach us at 1-800-551-5086. If you're driving through the area, Brian has a office in Greensboro, in Raleigh, and is also up there. What's the radio station you're on up there in Greensboro?
I'm on 94.5 Rush Radio out of Greensboro.
So be sure to tune him in if you're going through there. All right, once again, this is Paul Taylor, and we'll be back in a moment. All right, welcome back to the Financial Freedom Show with Paul Taylor, where knowledge is wealth. Today we have Brian Geiser, who is a radio show host up in Greensboro and Raleigh area. Brian has a financial advising services business up in Greensboro, and we've worked together for a long time. But glad to have Brian here today. Brian, right before we got off to break, we were talking about just all the stuff that's really going on behind the scenes in this economy and how people need to be prepared. And, 2008, a lot of people think that won't happen again, but it's happened. History repeats itself. We had 2000, 2001, 2002, which was exactly the almost exact losses that 2008 had. And here we are coming into 2012, coming into 2013. A lot of folks are still believing or thinking that, this isn't going to happen again. There's no way this is going to happen in my portfolio. But, Brian, we were talking that if you'd had $100,000 and you invested that in the S&P 500 back in 2000 today, after 12 long years, you'd have a whopping $108,000 in your portfolio.
Which is pretty sad. And if you throw inflation into that and round that off to around 3%, your money's not buying near as much as that 100,000 bought back then. You know,
exactly.
And people just don't think about that. They don't play that in, and I can understand why. We're always kept in the blind. The dumber we can keep our people, the more we can control the people. And hopefully people are understanding now, our public is understanding that, hey, I've got to, I just can't give my money to an advisor anymore. I've got to be a little more educated about it. I've got to ask more educated questions. Because a lot of folks don't know the difference, Paul, between an investment advisor and a broker, for that matter.
And that's a great point, Brian, because most brokers are commission-based, and being commission-based means they're going to be selling products or a product that is going to make them the most money.
Out of their inventory. They've got to sell what's in their inventory. All they have is a lot of people think, too, there was a survey done, and 98% of the people that use a broker thought that they had a fiduciary to them. And a fiduciary means that basically he's on your side, he's your coach, he's advising you for what is out there in a complete fashion. That doesn't hold true. They have a suitability to you to determine what is your risk tolerance, and then take the products out of their inventory and sell those products that fit your risk tolerance. Not necessarily the best thing for you, it just has to fit your risk tolerance. That in a nutshell is what a broker-dealer. So a good question to ask, hey, because a lot of people don't even realize what's my broker. It's my advisor. They don't know the difference. And I can understand why. A lot of people just starting to take tests like the Series 65. What is the difference? Because it is incredibly confusing.
Well,
who's a broker, who's an advisor, and what have you. And you need to ask.
Let's simplify it real quick. Folks, if you go to a butcher and tell him you're going to be grilling out, and I actually have a video I use with a lot of in our seminar that talks about this, he's going to sell you meat. He's going to sell you steak. He's not going to be concerned about your cholesterol or whether you're fixing to have a heart attack, because that's all that butcher does. And but if you went to a dietitian is going to tell you, hey, this is what you need to be eating, or this is what you need to be doing, because this is what's in your best interest, and this is what's best for you. And the problem is most people out there think they're going to a dietitian when, in fact, their broker is a butcher. So you've got to be working with somebody who has a fiduciary responsibility, and that is part of the class that we explain. And once again, that class you can come. We have it twice a week, Tuesdays and Thursdays. We're up in the Lake Norman area in Huntersville. We're in South Boulevard, Ballantyne, and off of Arrowwood Drive, and Brian's up in Greensboro and Raleigh area. But we've got those. You can call for one of these free seminars. It's 1-800-551-5086. By the way, I'm actually charging for this seminar at a college, so it's free information to you. And, Brian, that's just a great point, because you got to ask yourself, one of the first questions I ask folks when they come off is that you're never going to hear this from a broker is, how much of your hard-earned money are you willing to lose today?
Exactly. Going forward, how much of your money are you willing to lose today? And that's really where you got to be. Because the bottom line is, if folks, we will show you on a chart that's internet-based, so that you can go there and create this same chart and actually be able to read it when you leave our class. And it will show you back in 2008 how rapidly 30% came out of the market, 40% came out of the market, how rapidly, if you have 100,000 today, how quickly it can go to 60,000 at the blink of an eye. And it is taking forever just to get back to where we were in 2007. But now we're hitting that same resistance level, and the market's saying, I don't like this, I don't like this. And since they don't like it, the Federal Reserve and all the powers to be and the institutions who truly control the market are pushing it till after the election. But when the bottom falls out, you won't be able to get off. That train will be moving. Right now, the train's moving at about 10 miles an hour, so you could jump off. That train's going to be moving at about 140 miles an hour, and you won't be able to jump off. You'll have to ride that thing all the way down. Then when it starts to smooth over, you'll be so exhausted from the loss, so exhausted realizing you got to work another 10 years, that you're going to have to. You're going to feel your need of hopping off. You'll hop off. The train will leave town again. The market will rise back up some, but it won't be as aggressive as the last time. Then you'll get back on after the train's left town. I mean, it's just people, it's a psychology. They
Absolutely.
know how you operate. They know how you react. And if you don't have someone helping you guide, through that mess. God help you.
Well, and here's how you find out if somebody's helping you guide or not. You got to ask the question, what is your current financial advisor doing to help you or prevent the next 2008 or 2000, 2001, 2002? And what
So
Wall
what's your
Street
exit strategy?
Well, yeah, you got to have an exit strategy. And what is Wall Street teaching you is that, if you're in stocks and bonds, that's a diversified portfolio. I tell you point blank, that is not a safe portfolio. You've got to have a portion of your assets in safety. If you're fixing to retire and you cannot afford to have a portion of your portfolio in safety, you better watch out. Now, we do, we have risk portfolios, but when we do risk portfolios, Brian, we have tactical trading, which the tactical trading I might do this segment next week talking about, we can do a full segment just on that. But tactical trading means basically that they're not just going to be sitting there and buying and holding, that you can make money in a market that is moving, and whether it's moving sideways, up or down. A good tactical trading portfolio has availability to protect you in the downturns and to make money when it's going up. So, folks, the old buy and hold scenario that worked in the 80s and 90s is over. It's a thing of the past. S&P 500 basically has done nothing for the 12 years. Now I believe we've got 7, 8 more years of this. So, once again, we do offer go ahead, Brian.
No, I was just going to say, basically, in a nutshell, it's going to adjust when the market starts to collapse. It's not just going to sit there and hope that it doesn't collapse. That's the difference between as you call it, a tactical. It's a highly managed portfolio as opposed to a passive portfolio, as opposed to, hey, we think we've bought some value stocks that in the long run they'll win out. But what is the long run? What is your horizon? Are you 60 years old and you're about to retire and start taking income from that money? Have you separated your safe money from your risk money, your income money from your growth money? That's what it's all about. And what Paul and I teach you is the three worlds of investment. And basically you have potential money, which is your risk money. You have protection money. Money, I just can't lose any of this. And then there's this little unknown world of hybrid world, which we go into a whole lot more in the class that you definitely want to find out a lot about. Paul, go ahead and give them your number again.
Yeah,
your website.
Once again, for the class, 1-800-551-5086, 1-800-551-5086, or you can email us any questions you have or would like to hear on the show at pt@capitaladvgroup.com. You can go to our website and email us from the website, which is capitaladvgroup.com.
And that ADV as in Victor, A
Advisor.
as in Apple, D as in Dan, V as in Victor, ADV. And folks, do yourself a favor, go there, call the 800 number. You're taking a class, it takes about an hour and 15 minutes. It's a small environment. It's a very, very personal environment. And even if you want to meet with Paul one-on-one, call that number. He'll meet with you one-on-one and do that class one-on-one. Because
Absolutely.
you cannot go forward into this unknown land anymore. I'm telling you, they're setting us up. We cannot print our way out of this mess. And if you're not set up to, defend yourself for what's about to happen, you can really, 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 you're gonna have some hurt in your financial world. You're gonna be working till you're 80 at Walmart greeting people. You best be careful. And I'm not kidding.
I've seen it happen. No, I've seen people come in. It's happened.
And it happens so rapidly. And according to history, and according to tactical trading, and according to the charts, going back to 1830 when the market began, in a nutshell, and the markets have been around forever, but 1830 since New York Stock Exchange. But bottom line is, history says we're in a bear secular market, which basically means we're in a long period of a down. And every time that down gets back to where we entered this bear secular, which happened to be January of 2000, that the waters start getting rough and we collapse. We collapsed all the way down to 03, ran a nice bull cyclical period of time, which is about 4 or 5 years of a nice little run. And then we collapsed again much harder than the first collapse. And guess what? The third collapse, the wave theory as they call it, without getting into too many details, we're going to collapse again, most likely. The high probability of collapse. And now that they printed the money they printed, the collapse is every time they print $1, it's that much deeper that collapse will be. Well, the last one took us down to a 666. 666. You heard me. 666, 667. S&P. S&P today is over 1,400. That's
exactly
way more than a 50% collapse. If we collapse 60%, 70%, folks, just imagine 60 to 70% of your wealth that you built and work hard for gone.
Yeah.
You better learn about it. You better learn an exit strategy.
And
What's that number, 800 what?
That's 1-800-551-5086, 1-800-551-5086. And what Brian's talking about is S&P 500 didn't close but did go all the way down to 666, and that was the low of a day, but it's back up to $1,400 and hitting
1,400 points.
1,400 points and hitting almost the 1,500 ceiling seems to be a very tough ceiling for the S&P 500 to get past. It keeps hitting that, and once it hits that, it's pulling down, even with the trillions of dollars that our government's been printing. And we're going to talk about that, but we're going to spend a lot of time on this third segment of the show of how to pass legally over $5 million in avoided 55% tax on estate taxes at your death on this next segment. So stay tuned for that. Once again, please email us if you'd like to ask any questions or come in and talk with us. Once again, my web address is capital ADV, like an advisor, advgroup.com, and you can reach us for questions. And we'll address some of these questions each week if they're good questions on the radio show. But please call us for either the questions or for the mini seminar that we put on every Tuesday and Thursday. Once again, located up in Lake Norman. We're located in Valentine, South Park, all over the town. So just give us a call. We'll be back for a third segment to talk about some important estate tax planning. This is Paul Taylor. All right, and welcome back to the Financial Freedom Show with Paul Taylor, where knowledge is wealth. We have a very special guest today, Brian Geiser from up in the Greensboro, Raleigh area. Brian's a radio show host up in that area, and honored to have him here today.
Well, thank you, Paul, once again, and honored to be here, and I look forward to educating folks in the Charlotte area, in the Lake Norman and Charlotte area, because that's something this country definitely needs to do. We need to definitely take a modern pioneer day. We're modern pioneers, basically, in the nutshell.
I like that.
And you better step back and start realizing that's what we are regardless. And, no, we don't have to go out and kill our own food. There is grocery stores, but you better be careful. You better start paying a little more attention, and things aren't as automatic pilot as they used to be. And that's what our show's about today.
Yeah, and people have seemed to put their head in the sand and just not really wanting to think about it. And I'm hoping that will bring some light to folks, realizing that we are in what's known as a secular bear market. We are in the 12th year of that. I believe we've got at least 7 years left. And what that means, folks, is Wall Street calls it secular because it's a long period of time where you'll have your assets invested and not make any money during that period, or even lose money. And the shortest secular bear market we've had is 15 years, and so I believe we've got quite a bit of time left on this one.
A solid 7. As the way they're printing money, it's probably going to go beyond that as much. It could even go as high as 10 years beyond this. They have printed so much money.
And you know what? That's not me and you saying that. That is what experts are predicting. If you are familiar with Bill Gross with the PIMCO Total Return, Bill Gross had a great article in Wall Street about a month ago, and flat out said that the equity investing is over. The way the buy and hold time is over. You have got to be tactically positioned and trading, realizing that just sitting there and waiting for something to happen and hoping that the market's going to stay on a steady up climb. Those days are over. And for him to say that was pretty big. So we've got a copy of that article. Also, I've got a great chart. If you want to give us a call, or actually just email me, I'll email that out to you. My email is P as in Paul, T as in Taylor, @capital ADV, like Apple Dairy Victory, group.com. I've got a secular bear chart of not just bear chart, but a secular bear and bull chart that goes all the way back to 1896 of how, if you were invested in the Dow Jones Industrial Averages, those returns. So, but we're beyond just investments here. We're going to talk about a number of different things throughout the year here. We've got a special show talking about nothing about Social Security. There's 81 different tactics a married couple can take from Social Security that the Social Security benefits never going to tell you. We've got estate planning segments. We've got wealth planning. So stay tuned and continue to email us any questions or any other shows you would like us to talk about or put on. So, but one thing we did promise earlier in this show is the unified credit. And let me tell you what that is. Right now, actually 2010 was the year to die. If you died in 2010, you could pass every bit of your estate onto your beneficiaries with zero estate taxes. And in 2012, right now you can pass on $5.2 million per person. So pretty big, large amount. But there's a loophole right now. And by the way, if the fiscal cliff does occur January 1st, that's going to go all the way back to $1 million. And folks, that once again will involve personal property, that involves vehicles, all your IRAs, all your regular investments, cash accounts, your home, everything will be calculated for those estate taxes. And that tax starts at 50%, 50%. So if you are not doing any planning on that, you really need to be prepared for that. Brian, there's a loophole. The loophole this year, in the past, like let's say 2010, a lot of people think you have to die to take advantage of that unified credit. And in the past, there's been $1 million exemption that you could pass on and go ahead and file, hey, I'm going ahead and take advantage of my unified credit now while I'm living. But there's a loophole in the law, and there's only a couple months here. You better take advantage of it, where you can pass $5.2 million on your beneficiaries right now while you're living with no estate taxes. Wow.
I mean, you think about it, and how much do you lose if you don't do it between now and the 31st is what people got to think about. And that's $4 million.
Correct. Yeah, if it's a husband and wife, you can actually pass on $10.4 million to your beneficiaries. And it's got to be done in a certain way, and it's got to be filed properly. But you can actually pass on $10.4 million. If you did not take advantage of that, and they go back to the $2 million per person exemption, then that is literally a $4 million mistake that you've just made. And so, if you want more information on that, you can reach us, and I'll be glad to talk with you. You can leave a message at 1-800-551-5086. We have live recorders there. Or you can email me at pt@capitaladvgroup.com. So this unified credit, I don't think people really know about the estate tax, usually because they are dead when it has to be paid. So, when's
it due?
It's due 9 months.
9 months. And folks, that includes your life insurance if it isn't properly done upright. That includes your IRAs, everything. That estate tax is due in 9 months. And trust me, come heck of high water, the IRS going to get their money.
Mm-hmm. Yeah, and let's talk about that. Let's say you do have an IRA. So it's not only going to be federal income tax, but federal estate tax on there too. So your IRA could be getting taxed at 75% at your death. So if you do not have a number of things that we do for our folks is we do transfer on death forms to make sure that's set up right. We make sure beneficiaries are set up right. We even to the finer details of things. Brian, a lot of people I know give money to their churches or charities. And, one thing you can do, you can gift from your IRA directly to a charity and not have to pay taxes on that IRA. So that's kind of the planning we do. We go beyond just the investment scenarios. But we've talked about a number of different things in the show today, all the way from unified credits to having an exit strategy. So, but one thing that Brian and I both put on is a little mini class, mini seminar, and I wouldn't call it a seminar, but mini class where we teach you how to take care of your portfolio. And knowledge is money, right, Brian?
Yeah, and it truly is a workshop. It's not about product. It's all about learning. It's about questions you should be asking your advisor. It should be questions you should be asking yourself to determine if you even have the right advisor. So there's a lot of variables there, and folks, do yourself a favor. It doesn't cost you a cent, but it does cost you your most precious asset, and that's time. But if you're going to watch, TV that afternoon, and you could have been in that class, what's more valuable to you? And it blows my mind, and it's still the same statistic today. People will spend more time on one vacation than they do a lifetime figuring out where to put their money.
Mm-hmm. Yeah, and that's
and
sad.
Amazing.
That is amazing. And
then they ask, why in the world this happened to me?
Yeah, how'd that happen? Well, because you didn't plan, folks, and you didn't educate yourself. And that's one reason we do this radio show. That's one reason we do the mini classes. And, Brian, the mini classes, sometimes I had 7 in one yesterday, and we talked about an array of things. I always try to have a format, but we open it up, and I'll ask everybody, if there's a lot of people, I'll say, here's the question, do you guys all want to hear about this? And if they say no, then I'll tell the person we'll do it on a one-on-one another time. But to spend that time and talk to the folks about, what they're wanting to receive knowledge on, helps them not only with their future planning, but with their exit strategies. And we spent a lot of time on that yesterday. Most people have never heard the terms exit strategy. They keep listening to Wall Street folks out there talking about bonds and stocks being a diversified portfolio, and that's going to keep your portfolio safe. Well, we all know that's not true. If you had a portfolio of bonds and stocks in 2008, it went down. It did not matter. That is not a safe portfolio. That is not it might be diversified, but bottom line is they're so closely correlated these days, they both went down in '08. Because what's the number one thing that happens in a bear market, Brian, is people are wanting to just sell out. They're wanting to get rid of their money. They don't care what they're selling. They just want to get the cash and stop the bleeding.
Exactly. And then after the euphoria, the right now folks are in a euphoria state. But after the pain's kind of gone and they kind of rebuilt their confidence, but the problem is it's so far up the market by the time they get back in the market after a major collapse that they miss out on most of the gains. And to just sit there, though, especially if you're taking income from it, that's why you need a tactical core portfolio in these type of environments.
Well, and let's talk about that. If you're taking income from a portfolio and the market's going down, that's what you call reverse dollar cost averaging. And you want to talk about a portfolio going down quickly? Oh my gosh, that is not the position you want to be in. If you're having to take income off your portfolio and you're retired, and you have the possibility of not a possibility, but if there's another 2008, if that is going to change your life and the way you live, folks, you had better either receive some good advice or sit down or come to one of our classes and receive a little bit more knowledge on that. Once again, knowledge is money. And once again, give us a call, 1-800-551-5086. We have live operators. You're listening to the Financial Freedom Show by Paul Taylor, with Paul Taylor, and Brian Geyser is our guest. We'll be right back for our final segment. Well, I took a walk around the world to ease my troubled mind. All right, and welcome back to the Financial Freedom Show with Paul Taylor. I am the CEO and president of Capital Advisor Group, and I believe knowledge is money. And the whole aspect of this show is to educate you, and the whole aspect of our office is to educate you. We have a fiduciary responsibility to do what's in your best interest. We talked about that earlier in the first segment, what that means. What that means is we are not commission-based. Most of your brokers out there are selling for commission-based, and they are selling and buying and selling from their own book. So be careful. Know who you're dealing with and get a honest review. We talked about if you go to a butcher's going to be selling you meat, but if you go to a dietitian, they're going to be telling you what's best for you. butcher's never going to tell you about the great fish down the street from them because that's all they sell. And most brokers that you think are dietitians are actually butchers. So that is a part. We also talked about the unified credit. We're covering a lot today, Brian. But one thing we do that Brian and I do is we do a mini class at our offices. And I have offices in Lake Norman up at the Huntersville area. I have an office in Ballantyne, South Park, off of Arrowwood. And if you're driving through the area, Brian has offices in Greensboro, Raleigh, and Winston-Salem area. So, Brian, let's talk a little bit more about this class that we educate people so that they can be armed.
And just before we do, give out your 800 number.
I'm sorry, that 800 number is 1-800-551-5086. Once again, 1-800-551-5086. If you'd like
and live operators standing by, they'll take your information. You call them back. Is that how that works, huh?
That's how it works, and we'll get you scheduled in class. If it's full, we'll try to find a date that you can get into. Right now, these are at no cost. I'm actually should be starting January 1st in a college where I'm going to be charging for this class. And once I do that, then you're more welcome to keep coming, but I'm going to be charging you. So, Brian, this class is,
way to put that, Paul.
well, this class is good stuff. And, there's really no reason to do it for free. There's a lot of knowledge in it, and it's just a great way. I'm going to you're going to hear it all the time on here. Knowledge is money. If you don't have knowledge, if you're not being educated, then you're just sticking your head in the sand and not being prepared for this sideways market. This market that it doesn't want to go above 1,500 on the S&P 500. And it just keeps going up, down, and people are finally starting to realize, hey, my portfolio's done nothing. So why is that? And we explain that in the class, the mini class. We show charts that explains it and shows it very easily for you to understand. And then we educate people, hey, this is what Wall Street's wanting to show you, that diversification is bonds and stocks. Well, if you had bonds and stocks in 2008, you know that wasn't diversification. You were losing money. So what we
I think something real important about the knowledge we're talking about here, it's not just the knowledge, it's acting on that knowledge. We know we need to go to the gym. That's the knowledge we have. But if we don't go to the gym, it does no good.
Does that make sense? That's a great analogy. Very good.
So knowledge is potential power. It's not power until you act on it. And it's okay to bump up a little bit, but that's why you need a coach. And that's what Paul and I consider ourselves. We want to be that coach. We want to be that Vince Lombardi of your portfolio. So do yourself a favor, call the 800 number, and talk to the operators. Will take your general information. Paul or one of his staff will call you back and schedule you into the class. But even if you want to sit with him one-on-one and kind of go over some of these pointers on your own individually and apply your situation a little bit to it, that's fine, too. Paul, what's that 800 number again?
The 800 number is 1-800-551-5086, 1-800-551-5086. Hey, Brian, one thing I want to talk about is, a lot of people are just scared. They don't know what to do. I met with a gentleman this last week, and, just off of initial calculation, he had a lot of money. He's got over $700,000. But the problem is he's living off every bit of that, and he's got everything invested in money market right now, earning less than 0.5%. What is the problem with that?
Inflation.
Exactly. So if true inflation, folks, by the way, the government, now get this, your government is showing inflationary numbers at right around 3 right now, but it doesn't include oil or food. Now, Brian, how can that be? I mean,
no energy, no food.
Can you live without energy or food?
I mean, just think how crazy that is. When you just think about the logic of that, and really the biggest expense, if you wrote down, all you folks do this for yourself, whether you call us or not, and I hope you do, write down how much you spend on going out to eat and groceries in a month, and I promise you it'll be your biggest expense over everything.
Well, I don't know about most people, Brian, but I know I've got to have, I need electricity, I've got to have gas, and I've got to eat. I can live without a new car. I can live without new clothes. There's a lot of things I can live without, but it's unbelievable that the government puts inflation. It doesn't have that based in their numbers and their scenarios. So, folks, this is the type of stuff that we talk about in the class. You got to be educated. You got to be armed. And Brian, now you talk about a little bit more of the logical process of money. Let's spend a little time on that.
Yeah, well, logical process of money is something that's really overlooked, but we all kind of know it. We all know we need an emergency fund, and that's part. There's three aspects, if you will, of your money. There's three areas that your money, when you put it into these three separate accounts, if you will. Number one, everybody has a checking and operating account, and that is funded by your work, your hard work, and all your paychecks go in there. And then the extra drops into a reserve account because our hot water heaters, our roofs, all those things are going to go bad, and they're big expenses. They're not your ordinary expenses that you face every month, like power, phone, cable, food, and what have you. But then all the leftover from that goes into our fruit tree money, as I like to call it, because nobody chops down a fruit tree if they have any sense to get to the fruit. They pick it, they cultivate it, they prune it, they nurture it so that it continues to grow that fruit. And that's our investment money. That's our growth money, our income money. And those funds, you've got to nurture them properly. You can't just leave the tree alone and it's going to grow and bear the fruit, and the fruit's going to walk up to the house. You got to go out there, pick it, cultivate it, continue to plant more trees. Because if you don't, when you do retire, there won't be such a thing as retire. You're going to work forever. So the idea of having you a nice, field of fruit trees so that you can harvest the fruit is the name of the game for retirement. And a lot of people just take that for granted. Oh, yeah, I know that. But you don't really concentrate on it and try to build and expand in that world. And that's where the knowledge comes in. You've got to really learn about your fruit trees.
Yep. And
you
that's
really got to, what are your options? What are the world of potential, the world of risk?
And,
you know what I mean, Paul?
Well, and a lot of people, a lot of times, are still trying to. They've never gotten out of the. They've been in the accumulation phase so long, even with the fruit tree analogy that you're utilizing.
It's like staying with their pediatrician all their life.
Yeah, you've got there's times in your life you've got to change what you're doing. You've got to change the way you think. I had a guy yesterday in our seminar, and he goes, when is it that you just say the heck with it and start spending all the money? Well, the guy was 76 years old, and I was like, well, if you got enough money and you're not worried about your kids, go ahead and lay that plan out. It's not a bad plan, but, that's what you've got to, the thing with him is I was like, when are you going to die? You don't know, so you got to make sure if you're going to spend all your money that it's timed just right. But I thought it was pretty funny that he's like, I'm tired of trying to do this.
There's no reality to that unless you've got terminal illness, you know what I mean?
Exactly.
But hey, one suggestion to him, throw it all in a single premium immediate annuity, and that'll pay you a payment for the rest of your life that you can blow every single month, and it'll keep coming back.
Yeah, if that's what he was trying to do, then that would meet his need completely. So, and going back to what we were talking about, what we really spent a little bit of time with in the class is safety versus risk. And really, it's spelled out to where everybody can understand it very easily, because a lot of people consider safety being in bond funds or, there's a lot of different aspects that, once again, Wall Street's got them thinking that this is safe money. And, the creator of Vanguard says that you should take 100 minus your age. That's the maximum you should have exposed to risk. And if you're depending, having your assets exposed to risk and live off of that during retirement, you might want to hold off before you retire, because that is a very dangerous situation. That's where you're having to draw money. And if you're having to draw money in a down market, you talk about a portfolio eroding quickly. Watch out, folks, because that is going to happen.
That's a benchmark.
Mm-hmm.
That's a benchmark, because some people have $1 million and they can do the 70-30. Some people have $200,000 and it's more like 90-10 for them.
Yeah. So,
and that's the biggest thing. We use a benchmark and we work your particular situation from that benchmark and make sure you help us when you learn, if you become a client, to create your portfolio. Our goal is to help you understand enough that you participate to create your portfolio, that you're part of the construction crew, if you will.
Well, once again, folks, knowledge is wealth. Do not forget that, because if you don't have the knowledge, then you're going to get taken advantage of, and that's what we're here to help you to do. Once again, we put on many classes to help you with that. I will meet with you one-on-one if you want that also. You can
And
reach
the
us.
800 number?
You can reach us at 1-800-551-5086. 1-800-551-5086. This is the Financial Freedom Show. We've had a guest here, Brian Geiser, today. Brian, thank you so much for joining us. And I guess we'll be doing this again, and I'll be on your show here in just a few minutes. So, everybody, thank you for listening in, and have a blessed day.